Hi, folks. Another day. It is 12 noon in Western Pennsylvania. It is the 22nd of June. Beautiful sunny day. The storms and everything we had go through here yesterday are hopefully pretty much gone for a few days. So we've got some nice weather ahead for us. I'm Tom Young. I'm here for Facebook Live and podcasts called Money Shifts on anchorfm.com. So let's get started. We start every presentation every day with prayers for everybody because we're going to need them. We all need to be praying for each other. This virus that has gone around the world, I mean, I'm hearing things about depopulating the world, bioweapon. Who knows the truth or whether we will ever know the truth about anything. What I want to talk about today is the lies of the federal government and how they mismanage our money when it could be oh so very, very simple mathematically. And I'm going to show you that today in our presentation. We also want to pray for those who have lost loved ones over the last months, the last year or so. It has not been easy, I'm sure, because there were times where there were no funerals, no funeral home, and couldn't go there, which I thought was ludicrous, but anyway. We also want to pray for those who have been lost, that the Lord would open his arms and gather them into his kingdom above. In Jesus' name we pray. As I pray for everybody, let's talk today. I want to start with a quote. You know, Walt Disney was a very, very imaginative guy. And in his memoirs, you know, I've talked about this, the property that he purchased in Anaheim, California was purchased in about 1952. Now, Walt at that time was already a very, very successful cartoonist, had already created Mickey and Willie and the crazy mice that have been around the world many times over. And it's interesting, when he bought the Anaheim property, nobody would loan him the money because he wanted to build an amusement park for adults. And the only amusement parks that existed at that time was Coney Island type places on the East Coast. But he wanted to build an amusement park for adults. Nobody would loan him any money. Where did he get the money? He borrowed it from the life insurance company and used his life insurance as collateral to make that loan of $100,000 in 1952. That was a god-awful a lot of money in 1952. Imagine that he, like many other successful business people, banks, and people that are in the know and don't follow the everybody else is doing thing, have figured out the value of life insurance. It has no cost, folks. How much life insurance would you want to own if you could purchase it with no additional out-of-pocket cost? Simply by learning how to manage your money better. That's what I teach. To get the most out of every dollar that flows through your life. That's where the book, The Family Money Farm, the CFO Project, that's where that all came from, and it's all there. But here's some quotes from Walt Disney. The way to get started is to quit talking and begin doing. Our greatest natural resource is the minds of our children. They need to be protected, folks. Remember, we talked about the Fabian Society and how their role and their goal is to program the children into becoming non-patriotic, socialistic imbeciles. That's what they're growing young people into in the current educational system in America. It's kind of fun to do the impossible. Our heritage and ideals, our codes and standards, the things we live by and teach our children are preserved or diminished by how freely we exchange ideas and feelings. Walt Disney was a very, very unbelievable guy. I think he had the greatest imagination on earth at that time. And one of the things he said in there was, there is no end to Disneyland as long as there is imagination. Get that? Creative imagination lies inside each and every one of us and can change our futures if we apply those ideas. How do I learn how to apply them? Buy the book, Think and Grow Rich, or get it for free. It is a free book on the internet. Think and Grow Rich by Napoleon Hill. You can download it for free. Let's start. You know, the lies of the government and the lies of financial planning. Let's start with the financial planning lies. And these feed into the numbers I'm going to share with you today about taxation and how the government has literally lied to us over the years. They've either lied to us or they're that stupid. I don't know which it is. They're either idiots or liars, one of the two, because the answer is so simple. Steve Forbes talked about it, about a simple flat tax. I'm going to illustrate what that is. But your financial planner also won't tell you the miracles of compounding. Not only works against you with regard to interest on loans, but also in any taxable savings or investment vehicle. Your financial planner won't tell you that living on interest in retirement provides the maximum benefit for financial institutions that has your account, but it only gives you limited benefits in return. Your financial planner won't tell you that the costs associated with term insurance will certainly exceed the death benefit. Imagine that, you paid more in premiums than the death benefit would pay. Your financial planner won't tell you that mutual funds are not true investments, but savings accounts with risk. Your financial planner won't tell you that a typical financial plan concedes that 1/3 to 2/3 of your accumulated wealth belongs to the Internal Revenue Service and the US Treasury when you die, unless you plan to be poor. Your financial planner won't tell you that many of the typical financial planning strategies cause you to forfeit control over your future. And that makes changes to adjust either impossible or costly. There's lots more, and I'll have lots more of that tomorrow. But I want to go to, I'm going to share my screen today. Now remember, when I share my screen, I seem to get lost and unable to get it back together. But anyway, I'm going to share the screen and I'm going to show you the numbers. Let me tell you the story before I share the screen. Let's assume that your great Uncle Charlie 100 years ago was a businessman. Remember the roaring 20s of the last century? We're now in the roaring 20s of the 21st century, but there was a roaring 20s 100 years ago. It was crazy time. Opportunities to make money. The Depression ensued after that. But here's the thing. Great Uncle Charlie had a business, and in that business was a way to continuously invest money in businesses over time, never ending. So he left you $20 in 1921, 100 years ago. And that business, because it was invested in businesses, captured and guaranteed a 20% compounded rate of return for 100 years. The 100 years is up, and you just got notified that your account is now available to you. However, the IRS also got involved and says, wait a minute, you can't have this money without paying tax on this money. Now I'm going to share my screen and continue the story from there. All right, so there's the share the screen. Now, the story is there, and let me take it back to year one, and there's your $20 inheritance. Your $20 was compounded at 20% interest over all these years. So now we go down the list, and there's 50 years. So 50 years, the account is now worth $182,000. Okay, so that would have been 1970. So let's come forward to today. And oh, wow, all of a sudden, in 100 years, that is 656,359,490. And it's never been taxed. And the IRS comes along and says, no, wait a minute, we're gonna change this. And you know, the amount of money this is, we're going to charge you an average of the income tax for the last 100 years, and the average tax rate was 50%. And you say, okay, $1,656,000, half of that is like 800 million. So, okay, and so they do that. Now, oops, wait a minute. What happened? The account went from 1.6 billion to 275,000. And the IRS got a cumulative tax benefit of $25,000. Isn't that interesting? So that 50% tax on all of that money over all those years, because they had to go back to the beginning and tax it every year at 50%. So they took all that money out of the equation of the capital system, capitalistic system of America, et cetera. So you're attorneys and you start to negotiate with the IRS, if that's possible. And in your negotiation, you say, now, wait a minute. Now, the goal here is we both need to win. Remember in the book, The 7 Habits of Highly Effective People, it has to be a win-win strategy. So let's work with the IRS and see if we can find the win-win strategy here. So I'm going to change the tax bracket from 50 to 25. Oh, wow, what a difference. Now the result is 23,486,000. And the IRS got $1,021,000 instead of $25,000. So the IRS got a lot more money, and I got a lot more money. But even 25% is a lot of tax straight across the board. So let's go down and let's say we go to 15% tax and see what, wow, do you see what happened there? All of a sudden, the government got 3.3,077,000, and you now ended up with 131 million. Now, wait a minute, that's interesting. So the more tax the government takes from us, the less we end up with, and the less the government ends up with. You get the point here, folks? That they are idiots in Washington, D.C. That they have squandered our money and run up debt that can never, ever be paid back, which means eventually there will be a monster crash that will hurt all of us because of our idiot politicians. And you need to share this and make this go viral. This is crazy information. Now let's go back and let's go one more change, and I'm going to change it to 10% tax. Watch what happens. Oh, look now. Now the government's at $5,228,000 of tax collection, and you end up with $308,482,000. You see, folks, it's easy. And they are stupid. They are idiots in Washington, D.C. And I don't even know if Steve Forbes understands this, but I think he does, because Steve Forbes talked about the flat tax for the last decade or longer. He's been talking about a flat tax in America. See, the problem is the money gets squandered by the government, and it is not reinvested into our economy to create more and more of everything. That's what the problem is. So when I look at this, I mean, there is a diminishing return here. Even if I go down to 8, let's go to 8, and it still increases the tax. So right around 8 to 10%, based on my analysis, is somewhere around the perfect tax. Are you tired of paying 20, 30, and 40% tax to the government so they can actually squander it? And they squander it beyond our ability to pay for it and end up borrowing trillions and trillions of more money on top of. God bless, folks. This is the truth. That is what this is about. This is the truth. So you need to make this go viral. I'm going to share this around everywhere today. And everybody that sees this needs to make it go viral. It's only 15 minutes long, but I think the point was made with what I showed you on the graph mathematically. It was just that simple, folks. Just that simple. God bless. Get my new book, The Family Money Farm, The CFO Project. You can get it at Amazon, Barnes and Nobles. Any of the booksellers have it. Learn how to become your own banker. Learn how to manage your money like a CFO. Take control of your financial lives and make a difference for generations to come. You can also go to cfo-project.com. It's up there. Put in your name and email address and get the book for free. Get a free download. But here it is. This is the truth. God bless. We'll see you here tomorrow at 12 noon and follow up on this presentation.